Brought to you by Brand South Africa.
Now, Godfrey Mutizwa caught up with Arunma Oteh, the DG of the Securities and Exchange Commission in Nigeria, and asked her on what the capital market outlook is going forward.
It's a dream that could be realized, but I think people need to understand what integration means. Integration means having common standards, having common laws, sharing systems, and making sure that each of the individual markets are strong. Some of the reasons why people are talking about integration is that some of our markets are small.
Yes.
And when markets are small, they're not as liquid as they should be. And so what we need to look at is what should be our strategy for integration. And there are a number of elements. The first one is to recognize that there are poles across Africa.
Sure.
South Africa is a pole in Southern Africa. Kenya is a pole in East Africa.
Yes.
And Nigeria is a pole in West Africa.
Yeah.
And in North Africa, you would consider it Egypt from the capital markets point of view.
True.
And so what we need to also do is leverage some of the integration initiatives in those regional blocks.
How far are we?
We're doing well. I would say that from a capital markets point of view, the example to emulate is East Africa.
Right.
From an economic grouping point of view, SADC is a great example.
Sure.
ECOWAS is doing very, very well, both from a political union point of view, but also from an economic point of view. But focusing on the capital markets, we need to share systems. It will make the cost of transactions cheaper if we're sharing systems. If we have common standards, it will make sure that investors who invest in Southern Africa will already be familiar with the standards they will invest in East Africa or in West Africa. But we do have an auspices, which I'd like to share. We have a regional grouping of the Africa Middle East of all regulators. And this forum seeks to learn lessons of what happens with each of the groupings. And we're learning lessons from each other. And that starting point of sharing information about your efforts, about what works, an area that is of that is an area that is important for Africa is new products. There are lessons to learn from each market. And so if we work together, if we share information, that potentially we could learn from each other.
I asked the question because we saw the JSE's effort to try and see if it won, buy its way into Africa, that has failed, strike alliances that seems to have failed. So you get the perception that African governments, or perhaps regulators, I don't know where to put the blame here, there is a perception they want to create their national champions and keep them. Therefore, integration may be doomed to fail.
Integration is not doomed to fail, and I would not agree that the efforts of the Johannesburg Stock Exchange have failed. They've learned and understood more about other African countries. In fact, I would say that they've supported some of what you see as dual listings. For example, the Nigerian company, Oando, is listed on the Johannesburg Stock Exchange. A number of South African companies are doing significant business in Nigeria. MTN has its most profitable operation around the world in Nigeria. Mnet is in Nigeria, and I could name various others. So all of those things have supported the understanding and integration of the market. But your point around should we have national champions? It is an interesting point. I do believe that capital markets are an integral part of transforming an economy or transforming society. And therefore, the integration strategy must take account of the fact that you must have markets that are sufficiently supportive of the economic transformation agenda of individual countries. So it's a two-pronged strategy. Strong individual markets, strong connectivity where the markets are working together and sharing systems and sharing other initiatives.
Now, of course, when one talks about Africa's development and the growth of the markets, capital markets particularly, one looks at the example of Nigeria, and there's been a lot of effort in cleaning up that market. But now we are now seeing a probe by the National Assembly around some of the there are misunderstandings because from some of us who watch the markets, we didn't see the near collapse that the National Assembly is talking about. Can you give us an update of where that stands?
Well, first and foremost, the National Assembly in Nigeria, the House of Reps, set up a committee to take lessons from what happened as a result of the financial crisis and the consequence on the Nigerian capital markets. And what they've done over the last few weeks is try to understand what were the issues from a regulator's point of view, what were the issues from an exchange point of view, what were the issues from an issuer point of view, from an investor point of view. And their objective is basically to take these lessons and ensure that we use them for each of the stakeholders and ensure that our market is stronger going forward. So we've had an opportunity to interact with them, others have had. They're continuing next week, and what I suspect will happen is that they'll put together a report where they share these lessons that we've learned from the past. And I think it's a useful exercise.
And it'll be good for the Nigerian market. Finally, Arunma, if I can quickly talk about what new initiatives and what new measures you're bringing in and products to try and improve the standing of the Nigerian market.
Well, we have a number of initiatives because I think today there's a clearer understanding in Nigeria that capital markets are key. We have a country where we need more focus on medium to long-term finance. And so everyone is working with us in understanding that we need to provide this given the large infrastructure deficits that we have, particularly some of the challenges we have in power, the fact that businesses in Nigeria need medium to long-term finance. But for us to be credible, we do need to have markets that exhibit world class. Liquidity is important, confidence is important, products is important, the disclosure regime is important, and that's why this year publicly listed companies are migrating to international financial reporting standards. In terms of products, at the end of last year, we of course approved for the exchange to offer new gold, an exchange traded fund. And this is a third product in the 5-product agenda that the Nigerian Stock Exchange has outlined: equities, fixed income, exchange traded funds. But there's also an initiative, and they're working on introducing options in the not so distant future.
When will that be?
2013, end of 2013, 2014, and then financial futures in 2015. But I think also significant is some of the work that's being done in terms of non-interest finance, Islamic financial products, ethical products, what we're doing in supporting the retail investor to focus on collective investment schemes, because what we feel is that it will institutionalize the Nigerian market, bring liquidity, and ensure that retail investors get financial expertise as we develop the market. Because we do expect that, excuse me, over the next few years, over the next few years, a number of companies will be listing on the Nigerian capital market, and we would like retail investors to be part of this agenda as well.